Hey everybody, it is Friday the 21st of June 2019. Hope you had a good week of trading. The markets were quite positive here this week. The one thing I want to point out is the S&P 500 paid a dividend of $1.43, so it was really only down 33 cents today and making for a really good week for the S&P 500, for the Nasdaq, the Russell 2000. All of them were significantly higher except for the financials and the bonds, which lost a little bit of ground. So let's take a look at the charts and make some sense of it. Here's a daily chart of the SPY, and you can see on Thursday, it closed at an all-time high. Today we were down slightly, but still holding up very well. We have a rising 20 and 50-day moving average. We have a rising 200-day moving average. The bounce from the the volume-weighted average price from last year's low was really what set this rally off. It's been up greater than 8% in 3 short weeks, so it's getting a little bit extended, and oftentimes when we see a breakout that is extended, that we see some backing and filling before it continues higher. But the trend is still obviously higher here, and I think you have to continue to give the benefit of the doubt to the buyers. There's no evidence of any reason to sell short up in here. Here's our week-to-date volume-weighted average price. That's that blue line, so you can see we traded well above that, and the rising 5-day moving average, of course, as well. So an important level, I think, next week will be 291.5 to 292. If we come down to that level, I wouldn't view it as a negative. I would view it as simply some profit taking, and it looks like we might, that's what we might see, is something that looks like this and come down into there, and then of course we'll reassess and wait for the evidence for the market to signal us if it's okay to buy the S&P 500 once again. I'm not talking about individual stocks because they can obviously trade on their own merits. The Nasdaq was down slightly here today, just 22 cents, and you can see holding well above its rising 5-day moving average and 5-day volume weighted average price. Here's our daily time frame, so we're approaching all-time highs in there. Maybe maybe this market gets up through that level and pulls back, and before the S&P 500 pulls back. We simply don't know. But what we do know is we have a pattern of higher highs and higher lows. That's the definition of an uptrend, and to fight it is foolish. You can't be expecting to have large gains when you trade against the primary trend. The higher highs and higher lows means that the sum of the rallies is greater than the sum of the declines, meaning that mathematically there's a greater statistical advantage to trading along with the trend. The Russell 2000 dropped a little bit here today. This group has been the weaker one this year. It's nice to see that we closed pretty much right on that 50-day moving average and above the 200. So we've gotten a little bit extended in here as well. I like that though, because now we've got a level that we can come back from, that is to pull back. And if we were to come down next week into 151.5, 152, I suspect that that's where buyers will be found. Now, I wouldn't buy into that. I would wait for it to emerge from weakness. I don't like to buy the dip. I like to buy after the dip. And if that were to occur, buying up in here after little continued pullback, then we could set our stop, hopefully underneath the volume weighted average price from this recent low, which is also the year-to-date volume weighted average price, and at this point the 20-day moving average, which indicates to me that that area is a likely level that will be defended on any pullback. The semiconductors rallied right back up to the declining 50-day moving average in here, so I think that this market we're going to start to see the range that we're contract a little bit, and then maybe draw a little triangle, and then we'll see if the buyers can regain control, or if it's going to experience a greater breakdown. My suspicion is the buyers would regain control, but it's too early to tell. And looking at the intraday time frame, you certainly don't want to sell it short either. The Biotechs this week, last week we saw that, on Monday, we saw that the pattern that we've been talking about of lower highs and lower lows was broken immediately on Monday. So there was no longer an advantage to being short in there. The market continued to ramp up and closed right above not only the year-to-date volume weighted average price, that's the blue line, but also above the 200-day moving average. So it looks to me like this market's getting a little bit extended here near term. It doesn't mean short though. Look at how we came in right to the 5-day volume weighted average price today, and that's where we found the buyers, and it was pretty much up and away for the rest of the day for the buyers. Biotechs. So next week, I think that if we start to see a pullback, I would think that 105.5, 106 is the likely area where we would start to see buyers first come in and show that they're willing to defend that level that is. And then we'll have an opportunity for the 50-day moving average to flatten out as well. The financials, as I said, lost a little bit of ground. This looks like the key level here, 27.59. That's the recent high. If it can get up through that, I think that the financials are looking like they have the ability to not only break that trend line, but from this is a more significant trend line. And you can see I didn't draw it right off the top there. I mean, you could. It's really, as Larry McMillan says, you want to draw a trend line that represents the essence of trend. And basically, you know, getting back above these peaks is what's going to get this market really, I think, moving better to the upside in the financials. As far as individual stocks goes, there's still a lot of opportunities. If you caught me on Yahoo Finance, I spoke about CBOE. CBOE, this one has had a huge run in 2016-17 and then got crushed. You can see the volume weighted average price off of that peak right there. We're holding above it right now, and that volume weighted average price is flat. Over here, what we saw is kind of a similar situation, but we had a declining 40-week or 200-day moving average. Now we have a rising 200-day moving average, telling us the longer-term trend is in fact higher in here. So if we now switch to the daily time frame, we can see that the volume. Well, let's look at first. We're above a rising 50-day moving average. So if we're to get moving from here, you could probably set a stop underneath this low or under here, or worst case, I'd say right underneath this 99 level. It depends on what your time frame is. How much risk are you willing to take? What are you comfortable with? Perhaps you stagger your stops, a third under here, another third under here, and the final piece under there. What I'm looking for on the 30-minute time frame is here's our volume weighted average price off of this recent peak, and you can see we're having just a little bit of trouble with that. So next week, if we can get the CBOE back above 108 and change, whatever this is, then I think that's your higher high above a flat to rising 5-day moving average that would signal a buy. And then the job, of course, would be to manage risk based on your time frame. I set up stocks like this every single day for subscribers. That is, I outline swing trade ideas, give multiple stop scenarios so that people can make them their own. I'm not here ever to tell anyone what to do, but to provide a framework, a guideline that is based on market structure so you can make the trade your own, and that's what I like to impart. Hope you have a good weekend. I'll talk to you next week.